Hello, chart watchers, and welcome to this Monday, June 4th Market Watchers live show with your hosts, Tom Bowley and Aaron Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, we got the Dow Jones Industrial Average up 187 points to start the week. The S&P 500 up 10. The Nasdaq up 30, breaking to a new high and contributing to the gains we saw at the end of last week. Russell 2000 actually weak on a relative basis. We haven't seen that too often today, but it is flat today. 10-year Treasury yield continues to move up off the low near 2.76% that we saw last week. The 10-year Treasury yield back up about 2.5 basis points, 2.92% today. Volatility index, after a huge spike beginning of last week, we came crashing back down, and we are now down back at the 13 level, down another 3% today. Consumer stocks doing really well today. Consumer staples, haven't talked too much about consumer staples leading the market, but it is having pretty strong day today, up 0.7%. Consumer discretionary up 0.74. Leadership from the consumer discretionary space, apparel retailers up 18 points, about 2% today. A huge move up. This has been one of the strongest areas of the market over the last 3 to 4 weeks. As you can see, it's had a tremendous rally. Renewable energies on the other end of the spectrum. Big breakdown today. The stock, or that group, is down almost 7%. It's incredibly volatile, unfortunately heading in the wrong direction today. Among leaders on the S&P 500, we got Target Corp up $3.45, up almost 5%. And Baidu moving up, getting close to a gap resistance level, up more than $10 today, and it's up about 4% on the session. With that, let me bring in my co-host, Erin. It was another great weekend for the Caps. Erin, we got a big game tonight. We're leading 2-1.
Yes. I know I'll say congratulations. So far, so good, right?
Yep. I saw something from the Vegas Knights that came out, and they said, congratulations, you just won the best of 3. Too bad we're going 7. Hey, that was pretty timely, actually, because it does take 4 wins. You got to get 4 wins before it's over.
That's true. I just think that they can't win this year because what are they gonna live up to? They're an inaugural team. What do you do after that? You're constantly trying to live up to your first season. That doesn't seem like a lot of fun, but
no, it does not seem like a lot of fun. But I know
market's kind of fun today.
Yeah, the market is fun, and I've got a special guest. We have our special guest here with us today, John Hopkins. You with us, John? He may have stepped away.
He may have stepped away because he knows he's not on till later. Yes.
Well, we will have John coming in to talk a little bit about earnings season, some different stocks I know that he's been following, and some that he's watching. I think there's one that reports later this afternoon that he's going to talk about. And be sure to check out that poll in the room today, too, because just a general question about what you do with your stocks and your trading as you head into earnings reports. Do you hold? Do you sell them before earnings? Do you always hold them? Do you always sell them? Is it kind of a mixture or whatever? But definitely participate in that. We're going to bring that up later when we have John on with us, and we'll talk about that in a bit. But Erin, I'm going to let you take over, go through the announcements and the agenda for today, and we'll get going.
Absolutely. So tomorrow I will be doing my workshop. I have decided I'm going to do it on market breadth and breadth indicators. So that should be, I would hope, a good workshop. We've got Charlie Kirkpatrick coming in on Wednesday. Bruce Frazier, Mr. Wyckoff, will join us on Thursday. And Friday, we have Chip Anderson coming in to do everything stock charts. So quite a week ahead, I would say. As for today, we have Monday setups to start off after the technical news. Earnings spotlight, as Tom said, John Hopkins will be with us to do a spotlight. And 10 and 10, our first symbol is going to be Chronos Group, CRON. And finally, we'll finish up with my DecisionPoint report. I'll let you know what's happened last week, what's going to happen this week, at least what we think will happen next week. So with that, let's go ahead and move it to you, Tom, for some technical news and headlines.
Sounds good. 10-year Treasury yield. I've got a 10-day, 10-minute chart up. A little different look just to show you the big decline that we saw heading into, I guess, the end of the day on May 29th. And then, of course, the move we saw last week moving back up. We had the strong jobs report on Friday. That triggered the huge gap up early in the day for the 10-year Treasury yield. Actually, that means the bond market prices, bond prices were heading lower. So a lot of selling going on in the bond market, which created that gap up in the yield. Right now, we did move up, and right at about 10 o'clock, we hit a high at about 2.92%. You can see we're just sideways consolidating here, trying to take out that high from early on Friday. And if you look back, it's not unusual after you have a big gap down to go sideways and then break down, kind of go sideways, break down again, sideways. And that seems to be now what we're doing to the upside. We gap up, go sideways, gap up, a little bit of sideways action, move higher. And now it looks to me like we're just waiting for this next push to the upside in the 10-year Treasury yield. So that's something to watch as the day unfolds. A move above about 2.93% would continue this rally off the lows we saw last week. Of course, when you look at the financials, they tend to do well when we start to rise when we start to see that rise in the Treasury yield. And the past 3 or 4 trading days, we have seen the XLF recover. It was down at a major support level. So that's always a good sign to see a nice recovery there. Let's take a look at the major indices, and I'm going to go through these one at a time and take a look first at the daily chart. The Dow Jones has been the weakest among the major indices. I think a lot of that has to do with all the strength we've seen in the dollar, but trying to get back through 25,000 has been a chore for the past couple of months. That would be the first really good bullish sign on the Dow, is to clear that level. If we pull up the S&P 500, in each one of these indices we go through becomes more and more bullish. You can see the S&P 500 is moving to a 2 to 3 month high, taking out the double top that we saw in May, but still got some work to do to get back to the highs in March and back in January. S&P 500 also made up of 500 large multinational types that do suffer a bit when the dollar is moving higher. Then we move on to the Nasdaq. And the Nasdaq, huge move up, but we're still trying to get above that March high. So we've got really nice bullish action. I think the PPO looks good, turning up again. Price momentum is building to the upside. This is an all-time high that we need to try to negotiate to clear. And so it's going to be really important to try to get through that level. I think it's around 76.35, 76.40 in that area. So if we get a close above that level, that will add to the bullishness. We'll be in breakout territory. And then finally, the Russell 2000, taking a well-deserved day off today, down about 1 point. But we have already broken out above the earlier 2018 highs. We've hit all-time highs on the small cap index, both the Russell 2000 and the S&P 600 small cap index. Both have been moving to new highs. Slight negative divergence here, but we haven't really lost the breakout level. We haven't lost the 20-day moving average. I'd be more concerned here if we were to lose about 1610 to 1620 to the downside. Otherwise, I would continue to follow the Russell 2000 to the upside. If we stretch this out, look at a longer-term chart, I think it was great that we consolidated for a while. We came off a couple of 50-week tests, and you can see that has been a great area of support over the past couple of years for small caps. We did it again, broke out to new highs, and you can see the weekly PPO gaining strength here, which I think is an excellent sign. Longer-term momentum is looking very bullish as well. Let's take a look. I'm going to go through a couple of international ETFs. We don't really talk about that too often, but I wanted to mention first Spain. Spain was having a good day today. So the EWP, which is the iShares that tracks Spain, many of the shares in Spain, you see the big breakdown that we had with all the political uncertainty last week. But we are bouncing back. The good news is we're bouncing back. The bad news is we're getting close to an area where we broke down from. So I think the EWP is certainly worth watching as we get a little closer. The other one that I really wanted to mention was EWG, and this is the iShares Germany ETF. And when you look at this, you say, wow, it's, down here at this support level, Germany's not doing very well based on this. And we got this downtrend, and you can see this sideways flag action. So you might look at this and say, well, this is probably going to break to the downside, and it may very well. But I did want to point out one thing, and that is, hopefully, I think I already have it set up. Yes. Here, if you look at this chart, and let me update it, make sure we got the last data here, updated data. The top part of this chart is the German DAX. So you can see a nice uptrend, broke above these prior highs, pulled back, but really, I wrote in my blog last week, I really wanted to see Germany hold on to this 12,600 level on the DAX. So I think we got a nice move up, pull back to price support. Now we're trying to turn back up again. And this doesn't reflect today's action, by the way, on the DAX. The DAX was pretty bullish earlier today, although I haven't looked recently. So the DAX is continuing to bounce off of key support. But when you look at the EWG, which is the ETF that tracks Germany, where is this uptrend? I mean, here's the uptrend in Germany, but we don't really see it on the EWG. And in fact, we went down and had a lower close right here, even though Germany was much higher. And so you might be there scratching your head. Well, you've got to keep one thing in mind when you're trading these ETFs that track foreign indices. The dollar plays a big role. So as the dollar climbs, look at the relationship between the EWG and the German DAX. It is on the move lower. So even though you look up here and you see that Germany's doing well, when the dollar is rising relative to the euro, then the EWG does not perform well. There's a currency influence in these ETFs that track these foreign ETFs, and you have to be aware of that, because I'm very bullish the dollar. I don't think the dollar is over. It did hit a pretty key area of resistance, has pulled back a little bit in the near term. Maybe it pulls back a little bit more. But if the dollar index breaks above 95, it's at 94. It was at 94.17 at Friday's close. If it breaks back up above 95, I think the dollar could really be off to the races to extend this move that we've been seeing. And that is going to continue to put pressure on these ETFs that track foreign indices. So keep that in mind. What you see on the major indexes in these various countries is not necessarily what you're going to see on the ETFs that are designed to track those indices, because there's a dollar influence. Anyhow, I did want to point that out. I know we don't go over that too much, Erin, going through some of the international ETFs. We do, update it every once in a while, but that is something that's really been a big deal here for the past couple of months because of the dollar strength. As you see here, for the past 6 weeks or so, the dollar's been moving straight up. It's up probably about 7 or 8% in just the last 6 weeks. And that is really hurting performance of a lot of these international ETFs. So keep that in mind. Yeah. I'm going to turn it over to Erin. I know she's got a number of upgrades and downgrades, and then we'll jump into the Monday setups.
All right, Tom. Absolutely. Let's get right to it. Okay, so here are the lists. We have 3 downgrades and 3 upgrades I'll go through with you that we picked out. And we'll start first of all with the downgrades. Colfax Corp. We're hitting some very, very important support here. I went ahead and I wanted to look at the weekly chart on this one. I believe that was it. Yes, on a couple of these, I think the weekly chart's very important. So it looks like, we had come off that support level, but we actually this week are falling down below it. But the weekly PMO is what really worries me. So not only Colfax do they have a downgrade today, but I think their intermediate term picture doesn't look good. A lot of times we look at downgrades as a possible area to grab a stock that's strong, but has just been hit with a downgrade. But I didn't like Colfax at all there, especially when I looked at that weekly chart. Here we are with Metlife, also downgraded today. And with this one, I see it pretty much in the middle of this trading range. It looks like we're setting up a double top, but I would be more interested in this trading range. We're nearing the top. I've got a 20, just about ready to cross below a 50-day EMA. That would give me an intermediate term trend model sell signal, because the 50 is below that 200-day EMA. I wouldn't be looking at this for an intermediate term investment either. Again, I'm looking at this setup on the weekly chart here. I'm looking at a possible head and shoulders getting ready to form. And again, looking at that PMO in the intermediate term, it's already turned down. So, and you can see price is sitting right in the middle of this particular trading range. So reward to risk, certainly not worth it on Metlife. Trade Desk also downgraded today. This one had a huge gap up, and it really was overweighted. It gotten extraordinarily overbought. Look at the PMO reading at 15, and I know that's very high for this particular PMO on trade desk. But we've been very strong off of that, of course, relatively. You see a scooter up in the 90s. However, that's really a function of the fact that we had that huge move up. And now it looks like, as I said, it might have gotten a little overweighted, overbought. We're seeing a bit of a rounded top setting up here. I would stay away from this unless you like to short in a bull market. This might be an opportunity, but as Tom and I have said, we don't short during bull markets, rather stay with the overall market trend. Dollar General, let's look at some upgrades. And as you can see right now, we've got support that was not all the way tested. So I honestly find that to be positive. We do have that intermediate term trend model neutral signal. The PMO is certainly not looking that great, but we're getting a little bit of a rebound here off that scooter. This one I might watch because we did get that gap, and I would look for the closure of that gap and then a move up to the top of this trading range. But the PMO is still not quite healthy enough. So I think this one would be one to watch. Prudential Financial was upgraded, and it's getting a nice kick here with a move up 0.7% right now. Look at the PMO. We've got rising bottoms. That's always positive. We're getting ready to see a positive crossover. I would just be a little leery here because we did get a positive crossover buy signal back here mid-May, and that certainly didn't turn out to be all of the best signal in the world. We ended up at the top here, and once we fell back, the PMO fell further back, but it didn't fall as far back as price. So that would be a nice positive divergence. So I would look at this one, and I like I said, with Prudential, with many of these, I want to look at them more in the intermediate term, especially off this upgrade. I think we've hit some really important support, and it's holding. We don't have quite the momentum we would like to see in the intermediate term. We'll get a weekly chart, but I think support area having held, I think there's some opportunity here, and that might be one of the reasons we're seeing an upgrade. Whirlpool Corp, also one that bounced off of some important support back from April. I'm going to look at the weekly chart again by clicking on my style button. And again, we're looking at a stock that is hitting some very important support, and it's bounced off fully. Of course, in the intermediate term, you have to think about this PMO top below its signal line. I'd like to see it start to turn up. But in the short term look, the fact that we're seeing this longer term support, I think gives you, let's see, go back here to the daily. That should give you a little bit more confidence in the fact that we did get that bounce because it was off of very long-term support. So watch that. You've got the gap, so we may see this as a short-term island reversal. But I like this. I think we're looking at a breakaway gap. Whirlpool, I think, is looking good right now on that upgrade. So I think at this point, Tom, I don't know about you. I came up with a lot of stocks to do for Monday setups today, and I really had to kind of pare it down to just a few. Did you get some pretty good ones this week? Yeah. I know last week's didn't turn out perfectly for either of us, so I suppose we should look at those.
Yeah, I've got some good ones, but definitely let's start with last week's. I ended up getting stopped out on my own because I owned it.
Right.
But PE, if we pull up the charts here in just a minute, I mean, PE looked good, and I actually got a signal to sell it before my stop, and I didn't do it, and just kicking myself. But the stock had, after last Tuesday, I guess, because we did the setups on Tuesday, it was a holiday shortened week. I think PE went up for a couple of days and tested its 20-day moving average from underneath, and then came back down and finished on its low of the day. That was not a good candle and probably should have been a sign, a signal. I even thought about it at the end of the day, and I decided, no, I really like energy because, it's just one of those things where you talk yourself into holding. but crude oil prices had been holding $66 a barrel. So I'm like, no, that's going to turn. So I didn't honor the stop, or at least I didn't honor the, what I was seeing on the chart. And I decided to hold and keep my stop in place. Ended up getting stopped out. But it was a loss and it could have been prevented, no doubt. But yeah, the stock looks bad there. It looks to me like the $26 lows, maybe the double bottom from March and April, is where this one's heading in the near term. And by the way, crude oil price did lose $66 a barrel on Friday. So
didn't help.
Yeah, when the price tells you to get out, or when the candles tell you to get out, sometimes it's a good idea. But you can kind of look back 2 days ago, and you can see that test of the 20-day moving average, and then the reversal off of that, where it was up just above $30.
Yes.
Yeah, right up in there. Yeah, and then it came back down, closed on the low of the day. That is not a good, that's really not a good candle. That's not what you want to see.
Oh, certainly not. Off of that very short-term uptrend. Okay, well, let's see. Mine didn't do that much better. Let's see, when did we get in on this one? First Energy, I was in at 34 something. Let's see. I'm going to pull this one into a shorter term chart. Let's go ahead and look at it with thick bars for just 6 months. That way I'll see a little bit closer what we went through. So as you can see, this is where I came in on it. It was just about ready to have that PMO crossover buy, which it did get. And so we came up. We did end up doing pretty well on it until today, when we lost quite a bit. We're down over 1% right now on it. I don't think it looks too horrible. And I think I had set my stop right around that 33, 60, 50 level, somewhere in here. I'll have to find that chart, but I think it turned out okay. It's gonna, I mean, I think I would be holding it and watching that 20-day EMA. If we can close above it, I might consider holding that if you got in about the time we did. Okay, I am going to show you what I came up with then for my Monday setups. And let's go ahead and I'm going to view them all, just so you can get a peek at what I'm looking at, and then what industry groups and sectors. So I ended up getting quite a few technology stocks that came up in my scan, and that made me happy because that's an area that I'm very interested in right now, because the Nasdaq, small caps were doing quite well. The Nasdaq and technology was somewhat depressed during that time, and so it needs to catch up. And I think there's a lot of strength, internal strength there. So I was happy to see some technology stocks come up. But I'm really struggling with which one I'm going to pick, because GlaxoSmithKline looks pretty darn good. So I'm going to go through them, Tom, and then you can get yours all ready to go. So again, these are Monday setups. These are the ones that I have come up with today. The first one is Booking Holdings, BKNG. And nice PMO. We're actually getting the crossover today. When I ran the scan, we hadn't quite had that crossover. I like the breakout here. What'll be interesting to watch, though, is that 2150 level, because that would close that gap. We haven't quite closed that gap, which is why this was not my pick for this week. I think we will close and beat that gap based on this nice scooping PMO and that rounded bottom we're getting, and it's starting to come back up. So I think this is certainly worth a watch list. Depending on your risk reward, you could jump in on this one a little bit early and tighten, have a nice tight stop right around that 20-day EMA. Like I said, GlaxoSmith looked quite good, because I like the way this is breaking out from an ascending triangle. I'm going to annotate that here for you. All right. If I hold down my command key or your control key, you can get a nice horizontal line without having to figure it out to get it just right. So I'm going to look over here at this overhead resistance, and you can see we popped out above it. We're holding it now as support. the PMO, it is flattening just a little bit. And I think that's because we did come down off of today's intraday highs. So that's one of the reasons I do like this, is it did pull back after the breakout. You know, we're always talking about getting in on the pullback of a breakout. This is in the very, very short term. I like this pullback on the breakout. So GlaxoSmith, GSK, there's a high likelihood I'm going to pick that, but I'm going to go ahead and look at the technology that came up earlier. Appfolio. I liked this one. I think the PMO is a bit overbought, which is why I did not select it. It's had its breakout. It's continuing higher, and I believe it will continue higher after this breakout. I think we are going to start looking at more and more all-time highs for Appfolio, but I'm a little bit concerned about the fact we've got a very overbought PMO. So that was my reasoning at this point for not picking it as a Monday setup. I still think this one is a great setup in the intermediate term based on what I'm seeing here. I would just be a little bit leery of the fact we do have that overbought PMO. So I didn't pick APPF. Rapid 7. This one looked very good as well. We're getting the PMO buy signal coming in. You can see a flag forming in the thumbnail. And, you know, at this point, we're still waiting on that breakout. But we can see OBV is starting to really kick in here on this rally. Nice accumulation. And again, you know, this has had a strong scooter. So RPD, you know, if you've already got the strong scooter, now you're seeing volume picking up. You've got rising bottoms on the PMO. I think this is a good candidate right now. It broke out above, I'm going to point you to the thumbnail here. It broke out above that what looks like the middle of a double bottom here in the short term, but we broke out above that overhead resistance, and it's looking great at this point. But overhead resistance at that high we had back in May is looming kind of close. So I'm not so sure about reward risk here. You could look at this and maybe set your stop just below this area that was resistance and is now support, and then look for a move, you know, to that 33.75 area. That would be one way to get in on this in the short term. Tyler Technologies, TYL, really pretty breakout on an ascending triangle. And, you know, now we have a PMO buy signal. This one has been traveling upwards since I saw it earlier this morning on my pick. So it's making a big run. So I think that had it been lower where it was when I picked it, you can see a really nice ascending triangle here. And that breakout of that triangle today, I mean, I think this one looks really powerful. It's looking good. But as far as picking a Monday setup, when we're talking about such a short-term trade, it would certainly not be helpful for me to get into one that's already up 1.86% on the day. So with that, I think I am going to go with my GlaxoSmith pick, mainly because I did see this pullback coming in right now. So I think that's a really nice setup for my Monday setup. So GSK, that's going to be my pick for this week. And let's see, it's at $40.67. So that's what I will write down for myself.
Okay, nice breakout there. See if it holds. Okay, I am going to go this week with a biotech. I do like the biotech because they're pulling back today, although, of course, the one I wanted to go with is up just to make it tougher on my 1 week selection. Exactly. But I like Alexion Pharmaceuticals. I love this gap up. This was earnings related. They beat, I think they came in about 2% above expectations on their revenues back when they reported on April 26th. And they also, I believe, reported earnings that I think it was 68 cents versus 48 cents, if I'm not mistaken. Here was the big move with heavy volume that came in after that strong earnings report. And if you notice when it came back and tested the top of gap support, never went down to the bottom. And that's what I find a lot of times with these strong earnings and the strong reactions to earnings. When you get a big gap up and we keep going higher, a lot of times it's the top of the gap that actually is a better entry than the bottom. So here we came back down, we tested, moved back up, went right up to the tail around 123 from late April, tested that. And then slowly over about 10 looks like 10, 12 trading days, just meandered lower and lower and lower until finally on Friday, we broke that downtrend. So I like ALXN. The price currently is 120.08, so I'm going to go with it at that price. I think initially we've got a little bit of resistance up here around the 123 and a half level. But if the biotechs respond the way I think they are, and this one makes the breakout above 123, I think it can make a huge run back up toward the 137 level to test that earlier high in March. So I think ALXN looks good. Keep in mind, too, that the biotechs do tend to perform really well during the months of June and July, especially July. But June seems to get things started for the group. So I like that particular stock, and that's the one I'm going to go with for this week. But I have a few others I think either look interesting or are getting close to interesting levels. So let's pull up AXP, which is American Express. Big move higher here. This also was earnings related. You can see you got up to 103. We've had problems getting through that 103 level, pulled back, and we're moving closer to the lower end of the range. If we can get this back to 97, 96 into this area, I actually would feel better about it. It's got great gap support at 95. I don't know if we'll get all the way back down there or not, but certainly 96, 97 would be a really nice reward to risk with 103 as your target and a close below 95 as being stopped. DNOW, this is Now Inc. Huge move up in early May with earnings, continued moving higher almost every day for a couple of weeks, and just recently pulling back. I'm watching this maybe for some sort of a reversing candle. 13 was the breakout level here on the heavy volume. And you can see when we came back down the next day after the breakout, we hit 13 and then started moving higher. Now we seem to be drifting back down toward that 13 level. I think 12.5, 13 is going to be a really solid area for accumulation here on DNOW. ECA, this is in Canada. Another one that has done very well, made a beautiful move up. On the pullback, though, if we can get a reversing candle, right now we have a tail. Today's intraday low was beneath all of these lows going back the last 6 or 7 weeks. And you can see that this pullback also is testing the area of the breakout when we moved through about 12.15 on heavy volume in mid-April. So I think that this is a key area of support. I'd want to keep a fairly tight stop, but it's not out of question that ECA could make another run for $13.75 to $14. FITB, I like the financial space. I still like the banks. I think FITB, this could be a little bit of a spring action if you follow Wyckoff. This move down to the downside, took out these prior lows. I really like that long tail and then the doji that printed where we came back up and closed right about at the open, so you don't really see a candle body. That could be a very significant bottom in FITB. So I would watch $30. I wouldn't want it to get anything really below 30, even on an intraday basis, would spook me out of the stock. But I'd be looking for initially a move back to 32. And ultimately, I think we're going to have a run back up to 34.5 because I do like the banks in a rising interest rate environment. INFO, this one is IHS Market. Another one that got a little bit overextended to the upside after that move higher. Check out the RSI, got up 75. We pulled back to the 50-day, and it looks like we're just starting to turn back to the upside. You certainly could keep a fairly tight stop around 49, but I'd be looking for a target maybe back closer to 52.5. JHG, I mentioned this one last week. I'm still looking for some sort of reversing candle here. I really like the gap up with earnings back a few weeks ago. We went all the way back down. We filled the gap, and we've got pretty good support between 30 and 31, and we're trading at 30.96 right now. So this is an area, maybe if we got an intraday move below this low over here and then reversed up, that could be the signal of a bottom, one I'm keeping an eye on. Lennar. Lennar is a home builder, been under a lot of pressure for the past few months. But on the most recent lows here in mid-May, you can see the PPO was higher. I think we've got a positive divergence. I'd be looking for an initial move to about 55.5, 56 to at least test this breakdown that we saw back in April. Okay, well, let's get a quick summary of the stocks that we went over. Of course, Erin making her selection, going with Glaxo, GSK, and I am going to go with ALXN, which is a biotech. I just think the biotechs are ready to make a run. I might be a little premature, but we did see a breakout on Friday on the IBB before pulling back today. We'll see whether or not the biotechs can regain their strength. But those are our setups for this week.
Yep. I think I'm feeling pretty confident about this one. I really like how it's acting. I might actually check into that one with my broker today.
Yeah, GSK does look good. I like that, almost like a little bit of a cup and handle in the breakout.
Yeah.
Interesting to me.
We shall see.
All right, let's move on to earnings spotlight. This is a segment that we every couple of weeks we try to go over it. This earnings spotlight is brought to you by earningsbeats.com. Earningsbeats.com provides high reward to low risk trade candidates. Earningsbeats.com only trades companies that have beaten Wall Street estimates as to quarterly revenues and earnings, and they'll teach you to focus on that combination of strong fundamentals and strong technicals. Learn to exercise the patience and discipline of an experienced trading service. Earningsbeats.com, better timing, better trades. Mr. Hopkins, I know everyone might be a little tired of hearing about hockey, but I tell you what, you and I have been following Capitals hockey for a long time, many decades.
That's right.
And we don't get an opportunity to talk about really any kind of sports and championship. We don't get to mention those two words, DC sports and championship, in the same breath very often. So I'm taking an extra minute here to say congrats. We got 2 more wins to go.
Yeah, exactly right. There's only 2 wins to go, which will seem like an eternity. But I have to say, confidence is high. And I think that, when you stop and think about it, this Las Vegas team, which is terrific, is a group. It was an expansion team.
Yeah, they were
the 37 team in the league, and each team got to protect players, but the players who were left, they were left for Las Vegas to pick up. So Las Vegas picks up this group of guys, and now they're in the Stanley Cup playoffs, whereas the Caps have been struggling, for years to get to this point. So you better believe I'm pulling for them.
Don't remind me. It's been 44 years. It's been brutal. And I know confidence is running high, but let me tell you, if Vegas wins tonight, it goes back to Vegas 2-2.
Oh.
My confidence level may be down a bit.
I don't think it's going to happen. How about that?
All right. Well, we'll see. I hope you're right. Anyway, let's move on.
Yeah.
We got a lot that you wanted to go over.
Yes.
So what do you got for us today?
Okay. What I want to do is I want to talk about a couple of stocks, but after that, we'll go through these quickly. After that, I want to talk about my article that was in Chart Watchers this weekend, which focuses on stops and, show an example of why they're so important and why it can make such a huge difference in your returns. But before we do that, I thought I would, like to go over a stock that reported last week, and let's see how it's doing. And then there's two stocks reporting this week. I'd like to talk about them, and then a few stocks that we've added to our chart list. So let's start out by taking a look at Dick's Sporting Goods, DKS.
Okay.
And you can see that stock reported earnings. It just took off, right? Massive move to the upside. And people have a tendency, to want to get involved in stocks if they report solid earnings and jump in. But you can see if you chase this stock, that you'd already be down, a decent amount. So I think it's a case where this is what we like to do. We watch for stocks that beat earnings, see what kind of response they get, let them pull back, to levels that really are more suitable, and then maybe get involved with a, nice reward to risk. This one, pulled back, a solid 10% or so. I'm going to be patient with this and see if it can pull back a little bit more. But I'll tell you, Tom, if it does pull back some more, it's something that interests me because you just look at that volume bar on the pop.
Yep, I like the volume coming in. I like the sideways consolidation after the move higher. And what I really like is that it's in a good space. So you got the specialty retailers that have been moving up, breaking out the new highs. And you can see down below where we get into the relative strength of the industry versus the S&P 500. you're trying to beat the S&P 500, it always helps to be picking stocks from within an industry that is consistently been outperforming the S&P 500, and that is definitely the case with these specialty retailers.
Yeah, but be patient with it. I think you'll get a better reward to risk. And I want to talk about stock that's reported. A couple stocks reporting this week that people can watch. One is PANW.
Yeah,
they report after tonight. Take a look at this one. I think either somebody knows something's going on, or it's gone up so nicely. It's had a really nice run.
Yeah. They didn't report early, did they? I mean, I haven't looked.
Well, I'm starting to think, I actually didn't look at that, but I'm starting to think that they did. It was showing that they were reporting after hours, but now that you mention that, I'm starting to wonder.
Yeah, that's a lot of volume right there.
It's a lot of volume, but the stock has really been, it's so steady all year, going up nicely, but this is one that I probably, wouldn't even think about getting involved in unless it pulled back to that 50-day.
Mm-hmm.
And if it pulled back to that level, maybe a very tight stop, and the reward to risk, could be decent.
Yep, no doubt about it.
Here's one reporting AVGO. Now, this is Broadcom. They've been, sort of pursued, right?
Okay.
Broadcom. They're reporting, I think, after the bill on Thursday. And, here's a stock that it's had a really nice run here. I'm not going to get involved in any of these stocks, Tom, that report. In other words, I'm not going to get involved in them prior to the actual earnings,
Mm-hmm.
because we know what can happen if you get involved in a stock and they miss, or traders just don't like what they see. You can get really heavy-duty pullbacks. And so you get involved in a stock, they report, if you miss these days, 10 to 15% is nothing to pull back. So you're better off to let it report, let it pull back to a good, solid technical or price support area, and then get involved.
Yeah, it looks like over the last year, I mean, we had a breakout on Broadcom above $220, and we've gone back into that 220, 230 area on multiple occasions. So if they do come up and disappoint a little bit, it wouldn't be shocking to me at some point to see another move back down to that 220, 230 area. And then one other comment I wanted to follow up on PANW, because I was looking at it. They did report, it looks like they provided weak guidance.
Okay.
I don't know if they actually beat their estimates, but they did produce some weak guidance after the early gap up. I guess that's why we're seeing a lot of selling on heavy volume.
And even though it's not a huge amount, it's still 3%. If you're involved in the stock, you're still down 3%, and with weak guidance, you don't know where it's going. Right.
Yep.
Okay. Two more, and then I want to talk about stops real quick. The first one I want to talk about, this is actually, I want to let people know that we actually put this out as a long alert this morning to our members. It's on our watch list. They recently reported, and they recently beat earnings. And we waited, for them to pull back. And this is Cardtronics, CATM.
Mm-hmm.
And you take a look at the stock, they reported they made a nice move higher. And then, boy, just for the last 8 or 9 days, steadily moving lower, right to key support at the 50-day moving average, maybe getting a little bit oversold here. And so we put an alert out this morning right around 25.78. We got a price target of 29.70, and actually a second entry on a pullback to the 25 level.
Mm-hmm.
And then if it pulls, much below that, we'll get out of it. So we've got about a 5-to-1 reward to risk on this one. And if it steadies here, I think it could move higher.
Yeah, I like the fact that it's hit this gap support level. This was the earnings-related gap based on the strong earnings that it had. So it gapped up on some pretty heavy volume from 25 and change. It looks like we've come right down to that support level, trying to turn here up off of it. What's interesting is the last 10 days, it looks like we've been closing below the open, either at or below the open. And now today, we're at least intraday. We'll see how it finishes, but at least intraday, we're getting a hollow candle for the first time, which is a signal of potential accumulation. So
yeah.
We'll see. Hold on.
I think it's oversold. And then the last one on our watch list I wanted to talk about was PBH, which is Prestige Brands.
Mm-hmm.
look on the reported, look at that beautiful big volume burst, with the stock moving higher. And now it's, pulled back and consolidating. And we actually issued a trade alert on this one this morning as well. Close to the level that it's at right now. And I think if it holds right at this level, that it could turn and maybe take another shot up to, 36.50, 37 in that range. And we're going to keep a stop on this at 33. So if it goes against us, we're going to lose a few percent. If it goes in our favor, it's going to be a 10% winner. And so I like the 4 and 5 to 1 reward to risk trades.
Yeah, I like trading these stocks that report earnings and they pull back toward gap support. In this case, it went a little bit below the close back maybe a week and a half ago. But still within the tail that was triggered from all this selling, or excuse me, the buying that we saw, I guess maybe intraday selling, but then the reversal. So I think that this one looks pretty good as well. And I had noticed on the last one, along with this one, both these stocks had RSIs that came back down in the 40 to 50 range after being very overbought after
yes.
This one moved up, had the RSI at 70. I don't like to buy stocks with RSIs at 70 or 75, 80. I like to 40 to 50. So I think this is another one that's pulled back, looks pretty good.
Yeah, especially in the case of CATM, the one before, the stochastics are at 5. I like it. I like the reward to risk potential here.
Absolutely. It looks good.
Okay, now I want to just spend a couple of minutes on a really important topic, which is stop losses. Featured in my article, Chart Watchers. Anybody who doesn't get Chart Watchers, I read it all the time because you and John Murphy and Art and Erin and everybody who puts articles in there, I mean, you can't beat that. That information is like invaluable. So anybody who's not getting Chart Watchers, just do it. Get in it. And I'm fortunate enough, to be writing in it as well. And my topic this weekend was the importance of honoring stop losses. And I put an example in there of an alert we put out, Frontier Communications, FTR. And this is a stock that, we put out as an earnings, as a trade alert back on May 15th. Had an entry price of $9.30 and then back to $8.85. And then he pulled back and they both hit. But the stock went up 6% pretty quickly in a few days. Our price target was 11. Then we had a stop out of any move below 870 because I wanted a tight stop in case it went against us. So it made a nice move of 6%. Then Tom, within a day or two, some news came out regarding landlines that they were trying to auction off that failed. And the stock went into a free fall.
Yep.
And it fell another 17% below our stop, our intraday stop. And if there ever was an example of why you honor stops, it's a stock like this. Okay.
Yeah. And intraday stops, and you can argue for them and against them, and certainly in this case, it'd be a big argument for keeping an intraday stop as opposed to a closing stop because it would have saved you probably about another 6% here. But you can argue that either way. But I will say that I was talking about a stock earlier today, John. I don't know if you were listening, but PE, which was the stock that I had as a setup from last Monday, had almost an identical candle to this one right here at the top. And I noticed this one went up and filled this gap and reversed back down. Now, I'm not saying that guarantees you're going to see this kind of selling, but from a short-term trading perspective, sometimes when you hit a key resistance level and you see the stock back off from it, in my case, it was the 20-day moving average. It went up, hit the 20, reversed. I didn't follow it, and instead of taking a gain, I ended up having to take a small loss because my stock stopped out. But you have to keep the stops in play, definitely.
You have to. And I, mentioned in the article, and it's really interesting if anybody interested in this, because sometimes you wonder, are these things true? I put a link in there to an analysis that we completed recently that covers about a year's 12 months time from Q2 of last year through Q1 of this year. And it covered about 100 trades. So it's pretty substantial over a full year. And even though we had a few more losers than winners, we beat the S&P substantially each quarter. And the primary reason, without any question, was because we minimized our stop losses. And I think the average loss on the 50-some that didn't make it, that were losing trades, was just over 2%, whereas the winners were like 5 to 6%. So even though we had a few more losers than winners, the risk-adjusted return compared to the S&P was substantially higher. And I only point that out because I know how hard it is to honor a stop. You're down a couple percent and you say, I'm just going to give it a couple more days and see if it holds here. Then before you know it, it's down 6, 7, 8%. And you've taken something that you had a contained loss on and turned it into something big. And that's what I'm really preaching to people, is to really have your stop losses in place and honor them instead of letting things get worse.
All right, 2 things before you go. One, I just want to mention to everybody, chart watchers, if you go to the blogs page, blog articles, and then on the right-hand side here, you'll see chart watchers. It's a free newsletter. It's got great commentary. It comes out twice a week, usually first and third Saturdays of the month. And that's what John was just referring to. That was his article that he put into chart watchers this past weekend. But definitely sign up. This is the best thing that you could possibly do.
Unbelievable.
Come into stock charts. You've got to sign up for chart watchers. Make sure that you're getting the education commentary that you need to try to navigate this market. The other thing, John, is we've got a poll that's running. I'd like to pull that up before you go.
Okay.
Real quick, if we can. And that is, talking about holding into earnings. Whether or not you hold your stocks into earnings. First, we've got the stocks that you just went over, some of the stocks that you gave us. But I want to make sure that we take a look to see what folks do as they go into earnings, and do they hold? Do they? And here it is. So I hold my stocks into earnings. Only 12% said never. 15% said always. So more people that responded will hold always through earnings rather than never, and sometimes the majority, obviously.
And let me tell you something. People said sometimes they're holding more than you think. Maybe they don't admit it, but it does. Even if it's sometimes, if it's 50%, I'm telling you, Tom, it is. I don't care what you say. It is a crapshoot. It's a 50-50 proposition, because sometimes you'll see a stock that beats earnings and they still go down, or they miss earnings and they go up. It's just not worth it, in my opinion. You could hold a stock, Tom, for 2 months and it's gone up 8%. You're feeling great, and they report earnings down 15%. You've lost all your gains. Plus, it's just not worth it.
Yeah. Well, I'm not going to say I'm in the never category, but I'm pretty darn close to the never category. If I hold, usually it's a mistake, because I didn't catch it in time. I didn't realize that something I was holding was getting a report.
A suggestion, real quick: if you want to do that and you feel like you've got a winner, you're sitting there with 500 shares, knock it down to 150. If you want to sort of ride it, and see if it's going to be euphoric, this way you got some skin in the game, but you're not going to get clobbered as much. That's something to think about.
Yep, absolutely.
All right.
Always trying to minimize our risk. Appreciate you stopping by, John.
Thanks so much. Bye-bye. Go Caps.
Yep, go Caps. All right, there he goes. It is time now to move into the 10 in 10. Erin, do you want to go quickly and go through the RRG?
Absolutely. Actually, because you had some interesting conversation going on there, I was able to get all of them input. I think the last one I did get in was GALT. So anybody trying to request anything in the chat room past that, it's too late. Sorry about that. And right now, as far as our most popular vote getter, which will be the second symbol in the 10 in 10, right now, Micron is winning. So if that's not the one you want to see and you're in the chat room, go ahead and vote by liking the symbol requests you do want to see next. And here is our RRG. I'm moving it to a daily version. We've had Julius on quite a bit, and if you're looking for short-term trading, looking at what's going on in the short term, you want to go to the daily version of these charts. So at this point, what we can see are a few of these moving in that northeast direction, which is what you want to see. them doing. So those are possibilities that we might take a peek at. And then here you go, as in terms of sectors, what our requests were. And clearly healthcare, cyclicals, and technology leading the way as far as our sector requests. So why don't we go ahead and get started with Chronos Group, CRON, as your first symbol for the 10 and 10.
Okay, CRON looks good to me. I like this move to the upside. You can see the price action solid, but what I really like is the volume building on this move. We're not even to the, well, we just passed the halfway point of the day, and already almost 5 million shares have traded on this stock. So I think there's a lot of accumulation taking place here, and you can see for the first time in a couple months we're getting a positive crossover above that PPO center line. So I think CRON looks pretty good here.
All right. And the most popular in the chat room as I am speaking is Micron. It did win, MU. Second place, though, I think we'll probably look at as well because we haven't seen that one in a while.
Yeah, I saw a story earlier today. I don't remember if it was in China, the regulator, somebody was looking into Micron. And you can see it was down earlier today, but technicals went out over the fundamentals just about every time. And on this pullback, PPO was strong. Pullback got down to the 20-day moving average. We got a nice reversal. I think Micron still looks very good.
Okay. The next one was also quite popular, and we're going to look at Gilead, GILD, healthcare biotech, which you're tooting about right now.
Yeah, I like the group. Just, a lot of positive seasonality. I think the thing to watch here on Gilead is that we are breaking into a gap resistance zone. We are off the high from earlier today, and if this continues to sell off later today, this could be a really bad signal for the stock. Volume is picking up. We got all the way up to the 50-day moving average, but we are already a buck off of the high earlier today. And if this were to work its way back down to 68 and change later and fail to make this breakout on heavy volume, that would really bother me. But if we do get the breakout here, then I think we could be looking for maybe either this price resistance area right here, which comes across at about 71, or gap resistance, the top of gap resistance, which is a little above 72. Those would be that next area to try to break through.
The next one on the list, also kind of a popular request as well, is Evercore Partners. They are asset managers, EVR.
Okay, I like the space. If there's one thing I don't like here, maybe it's the negative divergence that has developed. So that would be a problem for me in the near term, thinking that maybe we'll see a little bit more selling. So for me, when you can take a look here, you got higher prices, and I'm just seeing this PPO rolling over here as we were going higher. And when I look down, I'm not seeing huge volume to support the move. So I'm thinking we could get a 50-period test. And if you look back, this was a breakout above the February high. And moving back down to 101, I think would set up a much better reward to risk. I like the stock. I like the breakout. I like the group. I like just about everything, except I don't like that slowing momentum, which typically can lead to a 50-day test, which you can see the 50 coming up from underneath. And you've also got some price support around 101. So I'd wait a little bit. I think you can get a cheaper price here.
All righty. CELG, Elgene.
Another biotech.
Yep.
All right, Celgene, and this one is not particularly good. When we talk about, actually, let me get out of this and let's go to that relative chart, because I think this is a good one to show you why, even though I like the overall space. I mean, biotechs, have been moving sideways. A breakout above the recent high. We saw it with IBB on Friday. Biotech index itself has not yet made the breakout, but it's been acting a little bit more bullishly. But the problem is that Celgene, relative to its peers, continues to move lower. So if there's one thing that really stands out to me about this chart, and the reason I would not be in Celgene, it's that there are so many other better biotech stocks out there right now. This is a good, solid, long-term company, but if you're a short-term trader, it's hard to make money when you've got a stock that's underperforming its peers. So I would look elsewhere in the group. That's all. I like the group. I just think Celgene is probably just still a little too early to the party here for me.
All right. For our friends in Canada, We are going to look at Horizon North Logistics, Oil and Gas Field Services Industry Group, and that is HNL.TO.
All right. Well, I probably don't need to put it on the, let's go ahead and just look at a regular price chart. Yeah, I love the volume coming in. It's kind of hard not to like what's going on here. Great volume trends. You got a beautiful uptrend in play. So I don't know, you can probably draw a trend line multiple places, but definitely there. And then the most recent breakout is right there. And look at on the move back to the upside the last 2 days. Check out the volume coming in. That's always a good sign. Now, I don't like to chase it after it's had a couple of days like this. So I like it better down around 273, 274, something like that, as it gets down closer to the price support level. And it's rising 20-day moving average, which over the past, really since back at the beginning of the year, we've only had a couple of days where we've traded below the 20-day moving average. So that's clearly, if we get it back into the 270s, you're getting closer to that 20-day. So I like it.
Okay. This one we haven't looked at for a while, eBay.
All right, it's in a good space. Not going to be one of the better performers, though. And I think right now it's at a key area on its chart. We had a big gap down. You can see the price support here from April 9th. We gapped down below. Look at the volume come in. And now as we've come back up, we keep failing just below 39. Right now we're at 38.96. So a break above $39 and a close there, I think would be bullish short term. Longer term, looking back, this is not going to be one of your better relative performers. So be careful if it fails. You can see what's happened here in the past few weeks. Failure has led to lower prices.
Okay, let's see. The next one is Electronic Arts, EA.
EA, got to like the breakout. Nothing wrong with this one, in my opinion. Got a little bit of a negative divergence, but that could get eliminated as price continues to go higher. This is what I'm referring to here. You got slightly higher prices, slightly lower PPO, but if the surge to the upside continues, this PPO could quickly escalate. I don't think that 2.5% on a PPO is overly. I don't think that this advance is overly mature at this point. Beautiful move up back in earlier May to lead to this sideways consolidation. Would have liked to have seen maybe a little bit more volume. That was decent volume on the breakout. Could have used a little bit more. Watch the rising 20-day moving average. And I'm going to say price support also around 130. I think as long as it continues to hold above 130, I think you're okay here.
Okay. Next one is a life insurance industry, would be IHC, Independence Holding Company.
All right, IHC. Looks to me like, well, maybe not quite a cup. This cup may have tippeth over. But let's take a look here. I mean, if we just take the close there and then, you know, the high over here. Whoops, that's not going to work out very well. Let's try this again. Take the close there, come down here to the bottom, and then this recent high. Not exactly a cup because I would have liked for it to get all the way back up to 39. But off of an uptrend, it does look a little bit like a cup. Volume picked up here on the right side, which is what you want to see. Beautiful pullback to the rising 20-day, and now it's trying to move higher. If there's one thing that bothers me about this chart, and anybody who has followed me for a while knows, I just don't trade stocks that trade volume like this. So you're talking about today, 6,000 shares have traded. That's a stock that could be easily manipulated, so I don't like to trade it. But other than that, I mean, the pattern itself, I think, looks pretty good.
Okay. And our final one, our only industrial sector request, Louisiana Pacific Corp, LPX.
Okay, lot of sideways consolidation, very wide trading range at this point, and we're getting close to the top of the trading range. So I don't think I would probably do anything with it. I mean, those were a couple of key lows to the downside. Here's a couple of key highs to the upside. And so here, I think, is your resistance. Down here is your support, and we're getting closer to the resistance area. PPO looks good, but it's looked good before as it's gotten up to these levels, and then it just kind of tails off. So I'd pay attention to this trading range. This is where it's been throughout 2018, between 26.5 and 31. So the closer you get to 31, the more, to me, it's a sell until it can show that it can break out. And to the downside, it's a buy as it gets closer to 26.5.
Okay. And that concludes the 10 and 10 to 1. And here are the stock symbols that we went over. I will get these up in the Market Watchers Live chart list. You will find that if you just go to the blogs tab, find the Market Watchers Live blog, and the link is at the top. It is also in every single recap that I do. So that's where you'll find them, and they have all the annotations and the setup so you can copy them into your own chart list. I think we should talk about something that's, can you believe it, 2 months away?
I cannot believe it. And I know, Grayson was asking for final, final headlines or, our topics for it. And I think that was disclosed in the Chart Watchers over the weekend. So as we start to get these deadlines that we have to meet, Erin, it starts to become very real.
Indeed. We are streaming live our conference, ChartCon, so you can attend it whether, you don't have to fly to Seattle. You can attend it on live at your workspace, be it on a boat, be it in your home, your office. You can grab it and watch it live, and there is social interaction that you can have with us. But yes, as Tom said, we've just updated the agenda. So we now have all of the final topics and presentation names. So you'll have a very good idea about what we're going to be talking about. Very important. I think it's very timely right now when we're looking at volatile markets to consider your risk management strategies. So I think that this is a really great conference and opportunity for you to do that for very little money to see all of these folks. And not only do you get to watch live, you will be able to archive the entire conference so that you can go back and look at what what you saw or what you need to take notes on later. And all of that is only $250. So as I've been telling everybody, one successful trade and you've pretty much made that up. And I can guarantee, I imagine you will find at least one successful trade once you watch the ChartCon and attend it live. Next up is our market update. And here you go. I have updated the candle glance that you can get to just from the front page. I have added the S&P 400 in here and the TSX. So let's go ahead and look at what's been going on today in particular. We had a gap up on the open for pretty much all of the major markets. You can see the Dow, after hitting its intraday high, though, very early this morning, has been consolidating ever since. We saw the S&P pull back slightly, and it is now back toward the intraday highs, but obviously finding some resistance there. The Nasdaq has stopped to consolidate as it continues higher. Interestingly, the mid caps had they burst out of the gate with a big gap up on the open, but pulled all the way back into negative territory before lunch. Now they are starting to make their way back up, picking up about half the gains that they had earlier in the morning. Russell 2000 is mostly unchanged right now. We have the Canadian markets, another burst on the open, but a pullback to negative territory, and now also trying to make a move back up. We have Treasury yields rising slowly. We were consolidating midday here, and now we're starting to see them rise, currently at 2.933%. UUP, the dollar, gapped down, but made its way back up toward positive territory, but it's getting stuck right under resistance from Friday's close. Commodities are lower, forming what looks like a reverse flag. Not good news for commodities. And you can see with USO, it's continuing its corrective move. We're now getting, USO is now at 1313. Gold mostly unchanged. I think this is good news with that it is up, though, given the dollar is down further. We just want to see a little bit more action on gold, currently reading 122.53. And finally, the VIX is continuing to fall. We're now getting readings, Tom, under 13 for the volatility index. And I'm going to, yes.
I was just going to say, anytime we get readings, you know, the actual level is one thing that I watch on the VIX, but really the direction of the VIX is the most important thing to me. When it's downtrending, it's really a bullish indication as the market kind of overlooks bad news as you get lower and lower on the VIX. And when it's rising, that's when you got to be careful. When it's in an uptrend and gets above, say, 17, 18, that's usually when you get those big drops to the downside. So I think the VIX still looks really good for the market here.
Yep. All right. I am going to go ahead then and set up here for the DecisionPoint report. All right. Today I'm going to go over for the DecisionPoint report. I'm going to go over not only the major indexes and what's going on a daily basis. I want to show you what's going on with the DecisionPoint scoreboards of the 4 major indexes. We'll look at my indicators, the DecisionPoint indicators for the very short term, and intermediate term. And finally, I'll finish off with the big 4 and what's going on with oil. So let's get this started with a look at the SPY. I'm showing the SPY mainly because DecisionPoint uses the SPY for all of our indicators and stock market signals. For the S&P 500, we use the SPY. And as you can see, I think the best news really today, you know, it looked really good on Friday, but we hadn't been able to get above that overhead resistance in the very short term from those May highs. And today we gapped up pretty much starting off on those earlier May highs. So really good burst. We were already seeing the PMO turning up above the signal line. We are far from being overbought. So this tells me there's the PMO and momentum can certainly build and build. And I suspect now that we're looking at some really positive action here, that we might be done dealing with all of this volatility and the correction mode. I think we're getting ready to come right back out of that. All right, I want to go ahead and show you, let's see. Let's look at the Dow, and I'm going to explain why we're looking at the Dow right here. And this is really important that you can go over here and get the DP signals right there for all 4 of the major indexes that we do track the scoreboards for. So what I wanted to show you was the fact that we have all of our scoreboards are showing green as far as price trend, except for the Dow. The Dow has held on to a short-term trend model, neutral signal, and a PMO sell signal. But I want to show you right now that those signals are probably going to die on the vine today. So let's go back to where we were on the DecisionPoint live chart list. I want to show you the DP daily chart for the Dow. All right, I think there's a lot of good news here. First of all, let's look at those signals, and you can see that the 5-day EMA is currently crossing above that 20-day EMA, and that is what triggers our short-term trend model buy and sell signals. So we're going to move from that neutral position into a buy signal for the short term. Look at how nicely we got the burst up above that overhead, above that resistance. I was looking at a really short term double top, and honestly with the big decline we had last week, that pretty much executed and completed as far as the minimum downside target, that double top. And now we're starting to see a move back out of that. The new buy signal for the trend model and the new PMO buy signal that will likely come into effect unless we see just the bottom drop out of the market, which I don't think we will see between now and the end of the day. We should get those buy signals back on those scoreboards. Excuse me. Now that we looked at the Dow daily chart and the SPY, let's go ahead and look at the OEX. Okay. And in this case, you'll notice with these other indexes, we've had those moves toward the signal line, but we got bull kisses. They came down, sort of faked out the bears, and then it came back up. We don't have a reading quite higher than what our previous top was, but I'm not too worried about that. these breakouts are really nice. We're seeing trading above those May highs, and I like that. And when you combine it with a bull kiss scenario here with the PMO, very positive information, very positive setup of the EMAs. Looking at the Nasdaq, this is the Nasdaq 100. This is one of the reasons why I'm pro technology right now. We were looking at a lot of consolidation. There was a need to break out, and we really, on Friday when we got that huge breakout, it really confirmed my suspicion that technology is really the place to be right now, because look at the momentum right now. It's just moving straight up. It was already angling higher without much hesitation. So we were getting that information just during that consolidation, seeing the momentum still rising within that consolidation zone. And now we've got that kick getting ready to test all-time highs here. So very exciting move on the Nasdaq 100. I want to now show you what our indicators are doing. So we just looked at the price trends of the market and the short-term momentum. And you can see again, this is the S&P 500. I did want to show you this chart. Got a really nice breakout above these May tops. I'm very happy with that. And again, that bull kiss on the PMO. I'd like to see the OBV get a little bit more healthy, but I will be okay with that, just because we did get that breakout and the PMO does look awfully good. So let's go ahead and look at we now looked at price trends and momentum. Let's look at our market indicators and see what they're telling us as far as the short and intermediate terms. This is the chart I use. I call them climactic indicators, because really what you're looking for are climactic moves or spikes in breadth, or to see the spikes on the VIX with penetrations of the upper and lower Bollinger Bands. That's the information I'm looking for on this chart. It's going to give me very short-term information. And I can tell you that having looked at this chart on Friday, I was somewhat fooled in thinking that after this really nice burst, these climactic readings on breadth could be pointing toward, a very short-term buying exhaustion. But, we got the climactic moves earlier. We kind of cleaned out what might be some of the bearishness as far as breadth, and we got these climactic bearish readings. So basically the volatility is really picked up as far as breadth, but watching the VIX, that was what would have kept me from getting bearish over the next, at the first part of this week, was the fact that the VIX is really not climactic right now. We're seeing it right around its average, and that's not telling us much. So we did get these climactic positive moves. We're now moving off of that higher with that breakout. I think we're still looking at an initiation for higher prices. Our short-term indicators are not giving us that much information, admittedly, and they really haven't for a while. We had what I really liked, and you can see it in the thumbnails, we had that consolidation, of the market, basically in that trading range between about, 2705 and 2740. And during that period of consolidation, both of these short-term indicators were able to decompress or unwind, get out of overbought territory. And since then, they really haven't picked a direction. I wasn't happy about them moving below the zero line, but they pretty much stopped their momentum downward at that point, and they're just twitching. They're really not sure which way they want to go, but they're not going lower. And I think that's positive. We have rising bottoms that you can see on these indicators. I suspect we're going to see them turn back up, and we will get that move up to the top end of the zone here for those Swinland trading oscillators, given this breakout. Again, I'm very encouraged by today's breakout. As far as intermediate term indicators go, a little bit of a mixed message. Not looking quite that positive right now. I've been very happy with these indicators as they were rising. They had topped, but I had said, well, I'm not going to get worried until they have negative crossovers. Well, now they have had negative crossovers, But the momentum on that move downward has been very slow, so that the rising trend, you can see here, has been able to stay intact. So we didn't really see a huge pullback on these indicators. And with this breakout, we certainly aren't going to see them move too much lower at this point. You can already see that they've ticked higher just on Friday with that nice rally that we saw Friday. So I think intermediate term indicators are still positive. Time to look at the big four: dollar, gold, oil, and bonds, and where we're standing right now as far as those go. I've been looking. Last Wednesday, I wrote about the fact that the dollar needed to have a moment to take its breath, catch its breath, have a nice pause, pull back these very overbought momentum indicators. And right now, we're starting to see that. What's good news is so far this area of support is holding. We've got some trading here, very close to that 2470 area, but we're still managing to stay above it. I'm looking for more consolidation here. I really think we do need to see a pause in the dollar, and I really think the indicators are telling us that's what we should expect. I would not expect a huge down move, just because we have an overbought PMO getting ready for the sell signal. I don't look for, a move that would just pull this PMO all the way down quickly. Like I said, I'm looking for some consolidation. Worst case, maybe get back into this trading zone. But I think the dollar is still looking very strong. It just needs to pause, get out of overbought territory on its indicators. So I'm still bullish on the dollar, but for the next week, I would say I'm looking for consolidation on the dollar. What does that mean for gold? Well, as you know, typically gold travels in the opposite direction of the dollar, meaning it has a highly positive negative correlation reading. But what I wanted to point out today is that we're seeing gold uncouple from the dollar. And I see this as positive for gold, in that if the dollar, is consolidating, this might actually give gold a chance to, rally a bit above overhead resistance. But let's look at what we're seeing here. The dollar had already started to consolidate, and we just didn't see that much out of gold. Friday was good. We did see that move, that pop above 1310, but price was not able to stick around and hold above this area of overhead resistance for this rally move. And I find that especially bearish. Now, admittedly, we just got a PMO buy signal in oversold territory, but notice that the PMO is already trying to decelerate. And you can see that as far as the scooter goes, it's moving back down into very weak territory. So this uncoupling of the correlation could be a good thing. If we see the dollar resume its rally, that might give the opportunity for gold, since it's not in quite the negative correlation, at least some consolidation, and not seeing the bottom fall out if we do get that rally to move back up in gold. So that's something to consider. And the reason I have started to put that correlation on the gold chart. Let's look at USO. Strong rally, strong, quick correction. We were looking at, if I had connected these rising bottoms, we were looking at really a parabolic move here on oil. I was not expecting to see this big of a correction this quickly. I was thinking we might get back down here to test that $14 level. Instead, gapped all the way below that $14 level, and is now today dropped below this support level where we had the January and the March highs. And it dropped below this rising bottom support trend line, this rising bottoms trend line. Bad news for USO. And let's take a look at what WTIC looks like. And we can see there's a little bit of support here at that $65 area. But the main area of support was broken right here, just like we saw obviously on USO, which travels similarly. Look at the scooter. It has fallen down and out of the sky. Bonds, I wrote about quite a bit extensively in the Chart Watchers newsletter. So I won't go too much into detail here, but we just got that intermediate term trend model buy signal where the 20 crossed above the 50-day EMA. That, like I said, gave me that buy signal. That's coming off of this really strong rally where we had breakaway gap, runaway gaps continued up. And it just was really a very quick rally. We're getting a very intense pullback right now. And I just feel like this buy signal has come too late. And, I have to turn these signals into timer digest. And this was one I really didn't want to turn in because my thought is, best case scenario, we're going to get down to this 119 level for a test. But when I looked at the annual, I must not have a button for it anymore. When I looked at the chart for well, actually this will work for the monthly. This was the heartburn I had, is the PMO has now reached readings that we have not seen since the 80s. That tells me there's some serious issues here in the long-term time frame. And look at that head and shoulders, pretty ugly. And that's all I had for the DecisionPoint report. Let me give you a few summary slides. And then Tom, we can chat it up and finish off today's show. So here you go with the DecisionPoint scoreboards. I did point out the fact that we have those negative, bearish signals on the Dow, but those have already disappeared. I suspect I'll be updating the Dow Industrial scoreboard back to buy signals for the short-term trend model and short-term PMO. When we discussed the price trends, let's go ahead and next chart. There we go. All right, so when we looked at the DP indicator sets, climactic indicators, we had those positive breadth climaxes, but with the VIX neutral, I think those are bullish. I'm not looking at them really as initiations though. Short-term indicators are neutral. Intermediate term indicators are mostly neutral. They are in a rising trend, but they are sitting with negative crossovers. And then finally, when we look at the big four, we can see that the dollar is really ready for a pause to clear those overbought conditions. And I know gold, it's struggling with that resistance, but there is support. And with that reverse correlation lessening with the dollar, if the dollar starts to consolidate, it might give gold an opportunity. Oil lost very important horizontal support. There is that intermediate term support level, but I'm looking for a continued decline right now on oil. We've broken through some very serious support levels. Bonds, like I said, we wrote about it in Chart Watchers, so you can take a peek there. But we've got that IT trend model buy, and I think it's late. I suspect we're going to move back down to test support at 119.
All right. Well, that is just about a wrap. I do want to point out the Nasdaq is above 7,600, hit 7,601. It's up 47 points today, and the Russell has finally turned positive today. So market looks pretty good to start the week.
Yep. I'm looking forward to a very interesting week. I think we're going to see a lot of breakouts. There's our weekly schedule for you, and I'll let you close it off, Tom. It was a great show and great to be here with everybody.
Yep. Great to start the week. I do want to thank everybody for being with us today. Please remember to complete that survey as you exit. We love to get your feedback and hear what you think of Market Watchers Live. Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody. We hope to see you back here on Tuesday. Go Caps. Happy trading.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.